Hi there, it's James Withall, CEO of Rupert Resources. Thanks again for taking the time to listen to an update from us. Our flagship project is the Ikkari discovery in Northern Finland, 4 million ounces, 2.5 grams, and we are currently in the process of drilling more than we ever have up there. We've got 6 rigs running, so it's a pretty busy time and a pretty exciting time to look for more and show you how good Ikkari is.
James, good to see you again. Just wanted to just catch up with you at the beginning of the year and sort of maybe lay out the plans for the year. You are doing lots of drilling, but a lot more infill drilling because 4 million ounces just isn't enough, is it sometimes?
No, well, not really. Look, it's about, for us, it's about demonstrating how good those 4 million ounces are. And one of the issues, we put out a resource quite early days, 36,000 meters. We're now well through 50,000 meters into it. And I think it's important for us and for the investors to demonstrate that, as we drill it out, it's still as good as it was, and it's hopefully going to get better potentially. So, that's these latest holes that we put out last week, I guess. More sort of 100 plus meters, 3.5 grams, more some narrow zones like 40 meters at much higher grades. But just I guess the problem with these press releases, Matt, at the moment is that you sort of look at the front cover, and I wish we could sort of put the whole back page on there, because some of those intercepts, like 15 plus intercepts over 10 grams in one hole, all in a continuous zone, and you just don't see that very often. So it's about continuing to show the quality, really.
Yeah, I mean the results are amazing. They're obviously significantly higher than what's gone before, which is it's a bit unusual, quite frankly. But here's the bit that we should talk about, because it kind of gets a little bit boring after a while for if companies putting out this good results week after week after week, and you've got a big long line of results coming through from assays. Is how do you kind of keep the growth component of this story fresh and front and center as far as investors are concerned?
I think there's a couple of ways. Obviously, there's for us, we're hoping that we can grow even within the volume that we've already drilled by just improving the quality of the ounces in there, and hopefully having more high grade blocks when we next run it. But also we are drilling to the extremes. We are drilling extensions to Ikkari. I think one of the most important things in this last release was the fact that where we were drilling maybe 9 months ago in the east part of the deposit, and it didn't necessarily hang together so well because we had so few holes. The more holes we get in, the more it hangs together. So obviously that extends there. But that's only one aspect of it. In that release, we announced some more heinous central ones, which is one of the satellites, some more copper gold hits, some really nice hits from there. But we are still doing a lot of exploration. So there's 4 rigs today at Ikkari doing their job. And then there's 2 on what we call new exploration. So this time last year, we had 2 rigs just at Ikkari. And this year we still have 2 rigs doing exploration, looking for the next Ikkari effectively, or looking for to find this, because that's where you really make the returns on the invested dollars as well.
So we've seen a little bit, and we talked a little bit about this last time out, which is of the M&A activity in the market last year, and also looks like there's been a few attempted versions at the beginning of this year too. You've got to paint, as a CEO, you've got to paint a picture of what it is that you are. I was talking to a fund manager last week about the moment at which companies have to kind of segue from let's talk to the retail guys and try and get them to, throw a bit of money at us, and perhaps a little bit of momentum and sentiment will get us over the line. You're way past that now. You've got a lot of institutional investors in there, and they're going to be asking you, and hopefully they're asking you, what's the game plan for this? Because you've got 4 million ounces. You'll do your infill drilling, and that'll get it up to a very meaningful number. But from what we're seeing from some of the press releases, there's more potential elsewhere. So what do you do? How do you position this? Because you don't want to be taken out now. You've only just started having fun.
Yeah, look, this whole point. I think the opportunity here is because we're in a greenfields exploration belt. Now, if I was jumped this and took it to the Abitibi maybe, or somewhere where there's been lots of exploration before, I'd probably be like, found Ikkari, or the chance of me finding another big deposit in a belt that's already well explored are really, really low. But the opportunity here is because you've got this really exciting belt. You've seen us expand our land package to 700 odd square kilometers now. So there is the opportunity right now. This is really the time to to step up the exploration, to find the other, to use the knowledge that we've built up over the last 4 years to go hunting for the next Ikkaris and demonstrate what else there could be. So, it's no doubt about it that, exploration discoveries, as demonstrated by ourselves, you $9 an ounce spent, $180 an ounce valued, 20 times return on that shareholders' capital that they've invested. So that business is still going. And absolutely, the team are more pumped than ever, probably because they know so much more about the region.
Right, so the team are, because they're looking at it on a daily basis, right? And they've got the understanding of what they're looking at. But for investors, they go, that growth happened real quick. And that's why I keep asking about is this a growth story? And if it is a growth story, where is it coming from? And so you've got to allocate, you got to spend money to make money. So in terms of the forward-looking growth component of this, some of that's going to come from increasing the resource size, for sure, but it's going to get to a point where it's like, okay, well, there's a company in its own right. You've just outlined, well, potentially what we're looking at here is a number of targets which you feel equally excited about. So what do we need to know about how you're allocating that capital, how long it's going to take, and how that builds on the existing growth story?
So if you look at this year, why really, if someone's holding the shares now, they're asking exactly those questions. How do we deliver on that going forward? So the key elements, well, the money we're investing in Ikkari is going to increase the value of that asset. There's no doubt about that. Whether it's by doing the de-risking with the PEA work, but also just drilling more holes into it and demonstrating it could be bigger, and the returns profile of that asset. And every time we drill one of those 100 meters at 5 grams, just think about how rare that is, and the ability to turn that block of rock into dollars effectively is very consistent. It's going to be easy, a lot easier than most gold mines. So that's going to come forward. So you're going to see value created there and some growth. But then layered on top of that is the original program we had at Ikkari. So it took us 2 years to find Ikkari, simply. The first holes were in the area of 2019. March 2020, we made the discovery, and then roll that forward to, May of this past year, 2021, where we cut off the resource drilling. So it's relatively quick, actually, that process. So our point is that we have a whole portfolio of these targets. Haina Central is one of them with a copper gold target. Haina South, we have 2 rigs sitting on right now, drilling that as well. So we have this whole portfolio that we're working through. So a lot of these targets, we're not starting now for 2 years forward. We've been working on these things all the time. So there's a lot of projects, targets that the guys have that are already well advanced, well down that 2-year time track. And what we've done this year is really step up it, because we see the opportunity really in the next 6 months to get as much work done and demonstrate. You don't necessarily want to get taken out now. You want to demonstrate what else there could be.
Well, you definitely do. And but this is why I'm trying to sort of wrap my head around the story a bit, because you're almost $1 billion exploration company story, which rare, okay. If you're looking to do more and build on that with some of these other discoveries, you're not going to be an exploration company forever. You're going to have parts of the business that are moving towards development, I guess, into production. Do you spin the production bit out? Do you sell the production bit out, or the potential production bit out, as the late stage development company out? And then continue doing what you've done quite well so far, more exploration, make more discoveries, build up the value there. What are the mechanisms or tools available to you to reward shareholders?
Look, I think obviously if you step forward a number of years, when this asset's in production, we see it as an asset that can pay those investors that came on, a significant return through a yield that comes out of it, which will be above the levels of standard yields from businesses. So, that's where you turn an Ikkari from what it is today into this long-term annuity stream that pays shareholders.
Well, explain that. What do you mean by long-term annuity stream?
So if you've got a long life asset in the resources space that is generating, it's going to have an above average, and I'd say the average profit margin for gold assets is like 10%, whereas the above average ones are like in the 20 to 30 range. So if you've got an asset like that, it can pay your, maybe 10% of that that revenue can go back to shareholders effectively as a yield stream that coming out of that. So that's your sort of annuity. But it's got to be
but it can. But most companies don't do that. Or if they do, it's a pittance, right? It's not a significant contribution. But so you've got to walk in with a mentality of, we want to do this. We want to reward shareholders, right?
And maybe that's the difference between me and the average CEO that comes into, because I've spent all this time on the fund side and being an investor and getting frustrated that you weren't getting rewarded because they were telling you this great story about, you know what, invest all this money with us up front, we'll find this thing, and then it's going to pay out so much money over time. As you're right, many of them don't, because there's always another capital bill, there's something else happens, the gold price falls. But that's because the average asset doesn't have a very good returns profile ultimately. And so I think what we've seen in the industry is a sort of slimming down. All the companies are chasing, the best companies are chasing the best assets for a reason, because that's the shareholders have now got used to this yield that they're getting off the companies, and they like that, and they want to stay invested. And they want to attract investors, a different type of investor that wants that yield. Pension funds diversify their investment base. And so through that, I think the business has changed. But unfortunately, there aren't that many good assets to feed that business. And when I came into this company, the whole point was doing exploration. Again, wasn't to find. We had this sort of 2 billion NSR thing. It was very hard to sort of say what we really wanted. But what we were really looking for was one of these assets that has these exceptional return profiles, that can provide a yield, fund the growth for the company through exploration, and afford to pay that. And still give something back for all that money invested and all that risk taken by shareholders at the beginning.
Do you think you've come from the financial sector? Okay, you're a fund manager at a well-known firm. You've walked into this environment and you're looking at things slightly differently. We've had some good conversations about what growth means, what growth capital is, and what companies should do in theory. Do you find yourself still looking at this sector and say, look, we need a bit more innovation as far as investors are concerned? You used to have a big investor hat on there. We probably still do. Or do you find yourself so worn down and feeling, well, do you know what? Okay, I can now understand why it works this way. So who's winning that battle?
Oh, I think I have probably a more balanced approach to when I was just a fund manager. I did work in the industry before, so I came into fund management sort of like, I wanted to jump onto that side because I'd seen all the way that business is run. It looked more efficient, and certainly fund management can be pretty efficient. But yeah, coming back in, 13 years, you do probably have a bit of bias that this fund manager view again gets a bit strong. Coming back into it, you do learn a huge amount of lessons again, and I appreciate that coming back into it. But I don't know. I think the business has changed a lot in the last 20 years, and I think has evolved in a good way. I think people should take that overall. I think it has evolved in the right direction. But also the shareholder base has changed as well. And the thing that I think the battle at the moment is trying to attract new people to want to invest in this sector and make it obvious. And the only way you do that is to really get sharp on the financial metrics. Is it a good business to invest in? It's mining. It's got there's a whole social, environmental side, which is ESG side, which is a concern to people. Again, how can you those only the best assets can afford the ESG cost, for instance. So you've got to keep on this focus. So it's no good discovering average assets because the cost to do business continues to increase.
It's interesting actually, because we occasionally use marketing people, and we reached out to a young illustrator and said, "Oh, we need you to do this illustration for something which we're putting out there." And he said, "I could never work with someone who works with a mining company." Right? Okay, why is that? Well, they're irresponsible and damaging the environment, and et cetera, et cetera. She said, typing it on her computer, responding to us, and then followed up with a phone call made from materials dug out of the ground. So I think mining has got a job to do in this sector more broadly about helping people understand the companies that do it well, or as well as can possibly be, and practices which are changing and evolving or need to evolve and change. So that pressure from outside is helping the industry change as a whole. And maybe rather than get stuck down that rabbit hole, coming back to my question on innovation, what do you think that you're going to do that's different for investors compared to what you have seen more broadly in the industry?
Well, that's a significant question, Matthew. So what are we going to do more different? I guess I'd say what we're doing more differently already, from the very first principle of what you're looking for is so important. So that the first principle is, if you're going to get into this business, you've got to have a load of filters that you're only going to spend time and invest money, invest people's time and our employees' time on doing something worthwhile in the first place, because you're affecting communities right from day one. So we literally go and explain what we're doing and why we're doing it, and it's been very well received. So we're at that exploration stage. So I can't compare to the producers and all the work they do on sustainability and ESG side, but what we can control is getting people to understand why we're doing what we're doing today, and how it can affect them, and positively, ultimately, how you can have a positive effect in the area you're doing. Because there's always, I could talk about the shareholders and how the positive returns I can get that, but just having that built into the company and the culture of the company right at the beginning is what we're trying to do, and work with people that have that have a similar mindset as that. That's what we can control, and that's what we can demonstrate to people right now.
Okay, I know you've got a hard stop, so we're conscious of that. You're going to, Tom, I think is going to come on and talk with one of our guys and get a little bit technical in a couple of weeks' time, because I'm intrigued as to how you build this out. It comes back to that growth. You've got to deliver that growth story, and you've got to therefore choose the order of play, which you prepare to move forward on and allocate capital to. So I'm looking forward to that. And I think more broadly in that conversation, we're talking about what 2022 looks like for you guys. But congrats on the results. High grades, always a good thing. Infill drilling, always a good thing. We'll see you soon.
Okay. Thanks, Matthew. Cheers.